Thank you, Mr. Chairman. Today, the committee will discuss how to best structure a strong, independent regulator with appropriate checks and balances as part of the new housing finance system. We have a broad panel of witnesses, and I thank you all for coming. In past hearings, I've highlighted the mistakes of Fannie Mae and Freddie Mac before they were placed into conservatorship. Not only did they operate as undercapitalized companies, holding just 45 cents in capital for every $100 in mortgages they guaranteed, but they acted like highly leveraged hedge funds, purchasing nearly 40% of the private label subprime securities at the peak of the housing bubble. These forces culminated in a perfect storm whose cleanup cost taxpayers billions of dollars in bailouts, crushing our economy and undermining America's international standing. We must learn from these mistakes. When considering reform, we must address three pivotal issues about the new regulator. First, how can it appropriately balance its dual role as regulator and reinsurer in a highly complex market with diverse stakeholders? Second, what authorities and powers should be vested in the new agency to ensure it is effective without duplicating existing efforts? Third, how should we structure the governing board so that the agency is well equipped to carry out its responsibilities on day one? S 1217 would create the Federal Mortgage Insurance Corporation, or FEMIC, as the primary regulator for taxpayer-backed mortgages. The FEMIC would provide catastrophic loss insurance funded by premiums and guarantee fees on eligible mortgage securitizations. As such, it would be a hybrid between the Federal Deposit Insurance Corporation and the Federal Housing Finance Agency. The FDIC was created as an independent federal agency in response to the bank failures of the 1920s and early 1930s. It is comprised of a 5-person board of directors with no more than 3 directors from the same political party. The FDIC has survived 80 years without depositors losing a single cent of insured funds, in large part because its board is designed for long-term stability and continuity without sudden movements or extreme policy shifts. As the guaranteed mortgage industry will need similar stability and continuity, the new regulator should have a similar balance of views. In addition, the new regulator will serve as the principal line of defense for the taxpayers and should have a strong, clearly defined purpose. Its activities and the activities of those it regulates must result in strong underwriting standards and responsible home ownership. Any reinsurance fund, industry participant, and ensuing mortgage or financial product must be well capitalized to insulate the taxpayers from unwarranted risk. And to adequately oversee a diverse industry and to coordinate with state and other regulators, the new agency will need superb technical expertise. In order to accomplish all these goals, we ought to reach consensus on key principles. The new regulator should be an independent agency, resolute in its mandate and unwavering to political winds. Its leadership has to be balanced out to ensure true political independence. Its safeguards and underwriting standards must be based on qualifying standards to provide mortgages, but to protect taxpayers. Its finances must be frequently examined to ensure accountability and transparency, including appropriate stress tests. And lastly, the agency cannot exist in a regulatory vacuum. It must coordinate with other agencies in a holistic approach to achieve sensible regulation. Any new regulator must avoid regulatory duplication that leads to increased paperwork and regulatory burdens which increase the cost of credit while creating legal nightmares. Adopting these principles is crucial because the agency will be tested immediately upon its creation. Some of the immediate tasks it will have to undertake include to establish rules for the structure and use of a federally insured mortgage market within perimeters set by Congress, determine approval criteria and guidelines for market participants, and set up a cooperative to ensure access for small participants in a manner that also maintains adequate taxpayer protections. Today's hearing is a good platform to discuss how best to enable this new agency to succeed. Thank you, Mr. Chairman.